Hey everyone, Jeff Dorman, Chief Investment Officer at Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the digital assets market. I do not have a guest today. It is just going to be me. Sorry to disappoint for those who wanted to hear another voice today. But a lot going on in the crypto markets for a change, which is nice. Starting to see some real price action here, starting to see some real dispersion, which is nice. I think we took last week off. Apologize, I was traveling, so we didn't get into that as well, but we can kind of double dip into the last two blogs here. For those who prefer to read instead of listening to me, obviously you can always go to our website, ar.ca/blog, and read the blogs yourself, where we usually go into a little bit more detail and have some supporting charts and documents compared to what we talk about when we are on here with you. So as always, this is not investment advice, but we'll get going here. So, I thought about over the Easter and Passover holidays here, you think about just how kind of ludicrous both of those holidays are when you actually break down what they are about in terms of how easy and weird it is when narratives either catch on or don't catch on. Pretty much anything can become reality if enough people decide that they want to tell that story. So that's a good time to talk about what's happening with Bitcoin right now. Is Bitcoin digital gold? I mean, I don't know, maybe, but if enough people say it is, then I guess eventually it becomes accepted. But then what happens when it diverges from gold? And I think, this is something we've talked a lot about in the past, which is that almost all of Bitcoin's correlations have always been very spurious. They come and go. There's no real reliability to it. That's why if you look at longer term correlations, they're near zero to everything. But if you look at any short term correlation over any amount of time, you can make an argument. So with Bitcoin and digital gold, 2025 is really kind of thrown it for a loop, which is, gold is up 30% year to date, and Bitcoin is, even after today's move, roughly flat year to date, down 3%. So pretty big outperformance for gold versus Bitcoin year to date. Clearly, it can't be digital gold, right? Or maybe you just zoom out and look over the last 12 months. So if you go exactly 12 months out, Bitcoin and gold are up the exact same amount. And that's because, Bitcoin had a huge move higher following the Trump election in November, and then came right back down. But if you actually look at the longer term growth or smooth it out, they've been moving in lockstep. So, there's lots of other narratives besides Bitcoin as well. Obviously, we've been talking about the fat protocol thesis for a while. The narrative that all of a sudden these layer one blockchains are going to have accrue all of the value relative to the apps, and that fueled a huge boom in VC funding. Everyone started talking about Metcalfe's law. All of a sudden, you had these insane valuations on layer ones that had no actual users and no traction. Or maybe the simplest explanation was more correct, which is that for something to have value, it has to either have utility or it has to have cash flows or both. And that's why, the majority of the winners in the last few months have been DeFi and DePIN and other areas of the market where there's actual real revenues and real cash flows. Last week, for example, Bitcoin was flat, Ethereum was flat, Solana barely moved. Meanwhile, you had things like Maple up 40%, Hyperliquid up 20%, Radium up 15%. All of these are cash flow producing DeFi assets. So, again, it's all narrative. I don't know the answer longer term, but shorter term, I think, we are just now at the mercy of very volatile markets where people are going to decide to make up whatever story or narrative they want that sort of helps pitch the ideas that they're currently investing in. What I do think is more interesting, though, is that now that we are starting to see this sort of resurgence, both in price action of the tokens as well as in terms of the way investors are talking about, again, revenue and cash flow producing assets being more valuable than these empty shell layer ones, something that Arca has been talking about for years. Now that this is actually starting to become a little bit more of common speak, it's interesting to go back now and think about the legacy that Gary Gensler and the SEC really have. And I think this is something that if you actually go into our blog, shout out to Topher McPherson, one of our analysts at Arca, who's done a great job. Just kind of talking about how most people in the industry really think that the FTX collapse and the subsequent SEC anti-crypto campaign that led to all these lawsuits at Coinbase and Kraken and OpenSea and Consensus, et cetera, that was the real harm to the crypto market, right? It certainly kept some institutional investors away. It certainly changed the outlook of crypto in a lot of people's minds. But what Topher was getting at was that if you actually kind of look back under the hood, that's not really what the most impactful and lasting damage is in crypto from the SEC. It's not because of the court cases. In fact, most of these court cases have been dismissed. The real damage that the Gensler SEC regime had on crypto really took place in WeWorks and garage offices across the world, where startups and founders were cultivating the innovations that define what crypto tech, especially in the U.S., is going to look like. Basically, what they did is that by directing all of this fear of jail time and fear of fines and everything else the SEC did towards founders, destroying their ability to launch digital assets with real fundamental underlying value, they sort of forced the market into this regime that we've had for the last 2 years of just meme coins and nonsense. So basically, if they said that everything with fundamental value, meaning revenues and cash flows and dividends and buybacks, could be classified as a security or worse, lead to the jail time of the developer, then on the flip side, the SEC is actually promoting the opposite, which is valueless, worthless, pointless, frivolous assets. And that's why over the last year and a half, we saw just a surge in the issuance of worthless tokens, creating a nonsensical market structure driven by short-term hype cycles. That's why things like pump.fun exist, even though nobody in the crypto world really wanted that. And this has led to a community of advocates who have been misled into believing that tokens with fundamental value are worthless, while tokens that openly state they have no value are viewed as valuable. I mean, look at the Zora token launch that's coming, as they associated with the base blockchain. I mean, purposely going out of their way to saying the Zora token is valueless. Like, how is that what anybody in crypto wanted? And it really was driven by the Gary Gensler regime. So, I think it's a little sad because it's a lot farther away from where most crypto enthusiasts want it to be. In fact, Gary Gensler, even last week, the irony of all this is he went on CNBC last week and essentially just gaslighting the industry. He made a claim that 99 to 100% of crypto tokens trade on sentiment and very little fundamentals. Well, yeah, because the Gensler regime made sure that anything that traded on fundamentals was going to have the risk of lawsuits and fines and jail time, and every legal counsel under the sun told the founders and community members not to have a token with value. So it's a purposeful, dishonest mischaracterization of our market. Shout out to those who are fighting against this. Certainly, Masari has been out there vocal for the years, and then you have a lot of analytics platforms such as Artemis and Dune Dashboard and Token Terminal and Blockworks and the Block and the TIE. Not to mention, fundamental investors like Defiance Capital and ourselves at Arca, who have really been focused on fundamental KPIs and understanding that there is a real link to token price with their revenues and cash flows. And ultimately, I think that we will move away from this again. Where we kind of just dismissed the last 2 years ultimately and realized that was not the goal of blockchain and crypto-based assets. We've worked with a lot of founders ourselves over the years, trying to help them understanding that you should be eager to launch a token, but you should be doing that because you actually think it enhances your business, not because you think you can get some pump and dump led by a couple of VCs or KOLs. And I think it's starting to change, right? I think we're starting to again see the prices of assets going up that make more sense. And therefore, what that does is it encourages founders and developers and entrepreneurs to go out there and build something similar again. So, look, I hope that the last 2.5 years of thousands of token launches where the asset was not designed to have any underlying value correlated to the success of the project, I hope that just becomes a sort of a meaningless couple of years in crypto's history. For what it's worth, I mean, it's the exact opposite of why I got into this industry 7.5 years ago. I mean, the first blog I ever wrote was back in 2017 or 18. And I talked about how, if I look at my investment portfolio, I don't use any of the products of the things I invest in, right? I've been a Starbucks shareholder forever. I don't even drink coffee. I only go to Starbucks to use their bathroom or to steal their Wi-Fi. So I get nothing out of Starbucks. Starbucks gets nothing out of me. I'm just a passive investor. Meanwhile, all the things I do on a typical night or weekend, whether that's going to restaurants or bars or being, at a kids event with my kids or doing something with my wife, I don't have any economic interest in any of the things that I actually do or enjoy. And I always thought that was what crypto could really do, right? It could bridge that gap between what you actually enjoy and what you actually invest in. There's no reason that you can't be an investor through crypto of your local, restaurants or your barbershop or your local gym, et cetera. Like, I do think that's where we're headed. And you're already seeing it a lot of times in many of these kind of crypto native online industries, like your DeFi applications, your DePIN, et cetera, where the customers are actually the ones who own the network. Very similar to kind of how banks used to be back in the 70s and 80s before the savings and loan crisis, where most banks were mutuals and the customers actually owned the bank, or looking at how insurance companies are right now. So I do think we'll get there. I think we'll get back to that, and I think it is driven by this sort of changing at the guard of the SEC, as well as again, when prices of good projects with real revenues and cash flows giving back to token holders through buybacks start to go up, you're going to see a mimicking of that. So I'm excited and encouraged by that. I think we'll, long gone are going to be these useless governance tokens and these useless meme tokens, and we're going to start seeing again this sort of move towards fundamentals. So I hope I'm right. I hope that what we're seeing right now is a trend. I hope it doesn't just reverse course immediately, and as soon as the market starts going up, people just start piling into their favorite meme coin again, which could happen. But we'll see. But for now, it certainly seems like we're past the worst of the economic crisis, in the sense that, obviously no real economic damage has happened yet from these tariffs. It's all just a fear of economic damage. So these can be kind of lifted and unwound at a moment's notice. You're seeing the equity market starting to see a little bit through that. Certainly the crypto market starting to see through that a little bit. If we do get a little bit of a reprieve here from the volatility of the global markets, then you'll start to see the better assets resurface to the top. Bitcoin already starting to show that a little bit. DeFi starting to show that a little bit as well. And we'll see what ultimately happens over the next 9 to 12 months of this year, or over the 9 months of this year, and over the next 12 plus months after that. So with that, again, happy to see some strength. Can't necessarily pinpoint exactly why we're seeing the strength in things outside of Bitcoin and DeFi. The Bitcoin makes sense as it plays a little catch up to gold, and certainly a fear of sort of government manipulation happening around the world. DeFi makes sense as we're just seeing record volumes and record percentages of transactions happening on DeFi relative to centralized exchanges. Not to mention many of these tokens, again, were the leaders in with revenues and buybacks. The rest of the market not really necessarily seeing a lot of reasons to be hopeful and see some strength yet, but animal spirits can take off, and we'll start to see a little bit more cash maybe that's sitting on the sidelines. I think something like 7 billion of stable coins sitting on exchanges right now. And again, that money has nothing to do other than be reinvested back in the market. So if that starts to come back into play, again, it's not going to be just the DeFi stuff and the revenue stuff. I'm sure you'll see speculative investing back into AI and back into memes as well. But more importantly, again, from my eyes, it's good to see that the narrative and the excitement over building real projects seems to be back in crypto after a 2.5-year hiatus. So we'll be back next week to wrap up April. Appreciate everyone listening as always. You can always go to our blog, ar.ca/blog. Arca also made a really significant announcement, not on the investment side, but on our lab side, which you can find on our website as well. So appreciate everyone. We'll be back next week. That's our 2 Satoshis for this week. Thanks, everyone.